Yeah, I mentioned the meteoric rise, Malcolm, that the stock has had. I read this stat earlier on Halftime Report, and I find it astounding. Maybe the most incredible stat that I've ever seen. NVIDIA has added more than $880 billion in market cap in 21 trading days. In 21 days. That's incredible.
Well, so your question about whether we're likely to see the slide continue or if this was just sort of a blip, we just got, as quickly as NVIDIA has rallied, we just got a bear market that fast, right? So escalator up, elevator down. But I think it's a bad idea to bet against NVIDIA here, right? The last couple of years, if you did from about 400 to today, you would have been wrong, right? So I think NVIDIA is one of those that it's good to own in proportion to the rest of the portfolio, but it's a bad idea to go chasing here.
Hey, this is not betting against, too. Let's parse those words a bit because, you could still love the stock and look at the rise that I said, and then when I read that number, the 880 billion in market cap, and just say now is the time to, cash in or take a fair amount off the table rather than continue to buy in. That's what I'm assuming that clients are asking people like you, who may not have as much exposure as their friends or others. They hear about this story, nonstop and are wondering, what am I supposed to do now?
So I was watching Halftime earlier, right? I saw the guys talking about trimming their positions, well, save for Jason, right?
Yeah,
the guys were talking about
two of the three who own the stock.
They're trimming their positions, but I didn't hear anybody talking about, after I've taken those paper gains and turned them into cash, I'm going and buying Apple, I'm going and buying Microsoft, right? Those are the three-horse race right now for the largest company. So what I do think there is potential for is for investors to be rotating some of that cash into other mega cap names that have fallen out of favor a little bit, especially with earnings coming up in a couple of weeks. I think names like Meta, names like Amazon, they will start to get some love again. And so it's just rotating those winnings over to what you expect to be the next winning horse.
Hey, speaking of, didn't you buy some more Amazon?
I did. I bought Amazon today, so I'm in a way talking my own book here.
Okay.
But I do think that Amazon is one of those names that has a lot of potential still locked up in it, and it's not quite getting the respect that it deserves just looking at the digital advertising component of it and their push into ad-supported revenue in addition to AWS and e-commerce.
I know investors generally aren't comfortable buying things at a high, but if we're mid-cycle, which we probably are, then we're going to be making a lot of new highs over the next 5 years anyways. And I think there's a lot of statistical support showing buying at new highs actually has a better win ratio than attempting to buy at lows.
Well, it's also true that for all of our lifetimes, the stock market has generally gone up. So yes, there are pullbacks. Yes, there are corrections. Yes, there are financial crises. Yes, there are pandemics. But is there any reason to believe that the fundamental nature of the beast has changed for the worse? I mean, I read this research sometimes, I'm sure you've seen it, that says, oh, we're going to permanently lower stock returns now. 4% a year is the most you should expect and things like that. We've pulled forward gains. I mean, do you believe there's credence in any of that?
I've heard that exact statement about the new era of low returns since 2008.
Right. And
stocks have compounded at pretty much the historical average since 2008. I think as long as there's skeptics out there, that means there's a lot of fuel for upside.
Mm-hmm. So is NVIDIA the thing that you look at and go, well, this could spoil the party, i.e. it becomes too much of a good thing. It really starts to lift into some kind of bubble, draws people into the market, really extends valuations, then we have to clean up the mess.
There's a lot of people trying to top tick NVIDIA, saying that they don't want to own it because it's expensive, but it's a 30 PE stock that sells something that no one else actually produces in the world.
The one thing it's not is expensive.
Yeah. So I'd say I'd feel very differently if we were discounting NVIDIA being larger than global GDP and at 100 PE, and everyone's saying there's no way it can be stopped, but because everyone wants to sell NVIDIA and try to call a top, I actually think there's still a lot of upside.
When I hear anecdotes, like I heard at a fundraising thing the other night about how all the local kids own NVIDIA, what should I think when I hear that kind of information?
Well, it makes sense. I mean, NVIDIA is the largest stock, so everyone should own it. It's almost like if someone said, I'm selling because everyone owns the S&P. Everyone should own some S&P. It's really a bearish sign when someone says the S&P won't ever go down. And I only hear people saying the S&P's topping right now.
I do remember people saying stocks never go down a couple of years ago. Then we finally had a correction. I think we've had a couple maybe since then. What kind of paradigm are we in now? We hear people saying, like Mark Zandi did, well, the Fed needs to cut because otherwise the economy could take a turn for the worse. We know rates are probably higher than they need to be. Do you need to have a view on Fed rate cuts in order to support stocks continuing to move higher?
To an extent, I think that the big lesson for the last 2 years is the S&P has endured some pretty severe rate hikes. So we know companies are managing this cycle well. If the Fed turns neutral or dovish, that's even more positive for stocks. So I think that the environment for equities still is good because they survived a stress test. It's only bad if the Fed has to raise rate.
Bryn Talkington, Requisite Capital. You're the one who owns NVIDIA. As I said, it had this quick correction of 10%. What do we make of that? Should we be concerned about where this stock is today?
I think it's so healthy. We would be concerned if it just continued to go up 2 to 3% a day. If you just look at basic technicals, it was so far above the 50-day moving average. That number is like close to $100. I doubt it gets there, but it needs to take a breather and consolidate. And I feel quite confident sellers will come in. But remember, earnings don't come out until August 21st, so it's like the very end of earnings season. So there's definitely some time to digest, think about, let it sell off a little bit. But once again, I feel really confident sellers are going to come in because they're going to have another spectacular earnings quarter on August 21st when they crush it year over year on revenues and earnings.
Steph, you watch a lot of markets over the years. I mean, when you see something like NVIDIA, which has accounted for a third of the S&P 500's gains this month all by itself, and then I told you the astronomical number of market cap that this stock has added since earnings in 21 trading days. What do you take away from that?
Yeah, I mean, there's total euphoria over this name, and it's totally overcrowded, Scott, and you have 89% of the sell-side analysts that have buys on it. So where's your incremental buyer and where's your incremental support on the sell side? So I think it's a little bit challenging. It got a little bit stretched, to Bryn's point. I don't think the party is over, but it's had a heck of a run, and there are so many other places within technology that offer better, attractive risk reward. And I've been a big fan of the PC refresh cycle. I think that area is very interesting. Not a lot of people are talking about that. And those stocks like HPE, HPQ, Dell, I like Seagate, CDW, even Apple is going to have a Mac refresh. So I think that's an area those are areas where are more attractive. Nothing is wrong with NVIDIA. It just got really overloved really, really quickly. And so if it does take a pause, if it does pull back, there are going to be opportunities, just like the last drawdown in March, where it fell 20%, went sideways for a while, and then eventually recaptured better gains ahead. Because the story for AI, it's not over. You're in the second innings at the least at this point.